Nedbank is set to take up the East African market by storm. This follows the announcement of the Johannesburg-listed lender's intention to acquire a two-thirds stake in NCBA, an equivalence of 66% of the bank, in a transaction set to be completed by the third quarter of the year. The transaction will see Nedbank invest upwards of $855 million. As Jimmy Mbogo now reports, the acquisition will see NCBA become a fully owned subsidiary of Nedbank.
The notice of intention from Nedbank Group to acquire a two-thirds stake of ordinary shares of NCBA from NCBA shareholders has taken the market by storm, with the move now seeing NCBA shares gaining 8% at the Nairobi Securities Exchange. In the proposals, Nedbank intends to buy NCBA shareholders out with an offer that will see them receive 20% cash offer, with the remaining 80% being settled as a share swap. According to NCBA, the transaction is a strong vote of confidence in its performance, governance and brand.
80% of the consideration will be paid in shares of Nedbank trading at the JSC, and 20% will be paid in cash. Obviously, as we will see, there's a caveat that there are shareholders who own shares which, when converted, would be less than 200 shares of Nedbank. Then those will be paid in cash. And any shareholders who, for regulatory reasons, cannot invest offshore.
We do expect, this is actually positive news for shareholders, we expect a rally. Since the market's open, we've seen an 8% improvement in our stock price. And we expect that will continue throughout the day as investors take into account the news and really see the opportunity that this unlocks for NCBA.
Despite Nedbank owning a majority stake in the lender, NCBA will retain its brand name, with Nedbank expected to use NCBA as a platform to expand across East Africa, while NCBA gains a larger balance sheet, access to corporate, investment and wealth management expertise, and new growth opportunities, particularly in markets such as Ethiopia and the Democratic Republic of Congo.
This will give us access to clients that perhaps before we wouldn't have had access to. We have international clients in this market that tend to prefer international banks. We believe now we're in a position where we can go and compete for those clients with everybody else. There are Southern African clients who bank exclusively with Nedbank who are here, and we think this gives us an opportunity to go after those clients.
Gashora has further assured the bank staff and shareholders that there will be no immediate disruption to customer experience, emphasizing that customers will continue to enjoy their services uninterrupted. He also assured staff that there are no agreed changes to NCBA's management, arguing that Nedbank is investing in the current leadership team.
Because Nedbank does not have a physical presence in the places where we operate, there will not be any overlap between us and Nedbank, and therefore we do not envision our employees being affected negatively. Jimmy, you recall the reason we met many times when we were doing our integration was certainly because it affected our customers quite negatively, systems, people and everything else.
Jimmy Mbogo, Citizen TV, Nairobi.